Hey, everybody. Welcome to the morning market briefing. It's Thursday, January 15th, 2026. Hope you are doing well out there. Tom, Ben, how we feeling?
Man, most of the way there. Thursday.
It's brisk outside. I mean, it's
chilly.
It's high energy time.
Big swing and a miss by Chief Meteorologist Andrew Hall last night. I thought the roads would be icy this morning. I mean, there's some ice in my parking spot. I was expecting a little more. As a quick reminder, if you're watching the show, especially if you're watching live, shoot us an email if you have a question or comment. tmmb@narwhal.com. tmmb@narwhal.
We have received an email complaining about the intro music, and I would say that is a negative consequence of being on YouTube, is we can no longer just play whatever music we want.
Yeah, I'm happy to set up. I think Hicks would be fine with us setting up a GoFundMe if you want to pay for us to acquire the rights to play music, but I don't think we're going to raise that kind of money. It's a hurdle. I don't know. I don't totally understand YouTube law, but I guess it makes sense, and we're kind of stuck with it.
I will say, in the podcast business news, I've watched a couple podcasts that were acquired for Netflix, and I will say they did not get the rights to music for some of their big segments. Like I was watching Pardon My Take. They do the fastest 2 minutes where they do the parody of Chris Berman, and they can't do it with the music anymore, and it makes it fall very flat.
Yeah, I could see that.
So one day.
Yep, I could see that. All right, let's talk markets. Ben, yesterday markets really moving as if Iran was going to have a flurry of activity. Oil was going up, defense stocks going up, defense sectors outperforming in general as of this window. But in the Oval Office, Trump said that Iran had stopped the killings and the executions and no action was going to be taken. Meanwhile, simultaneously last night, just continued disagreeing online chatter, I would say, from what is being said by Trump. And I don't say that, frankly, with any degree of skepticism or confidence in one side or the other, but it is noteworthy because I find what he is saying to be in complete opposition to a lot of the voices on X, for instance, many of whom are politically aligned with him.
Yeah, there's a lot of chatter that like the USS Lincoln is moving towards the Middle East, but could take a while. So that would mean that like the imminent strikes are not so imminent because
but then they were also like clearing out airspace last night,
moving troops.
Yeah,
a lot of like.
So
I saw some huge bombers leaving somewhere.
Here's my thought on the whole situation. Number one, whenever Trump does anything, we usually don't know about it until it's already been done. It's not like Russia's massing on the border of Ukraine. Russia's massing on the border of Ukraine. Russia's massing, and then it's like
ready, set,
Russia,
go.
Yeah, I mean it's
especially when you think back to the operation in June. It was like everybody heard about it a couple hours after.
June, so many, Venezuela, exactly. And so I think that there is a constituent force in both markets and politics and a large constituent on X that, quoting Batman, just love to see the world burn.
Yeah, so there's a cross-reference of...
There's a cheerleading section in the world of people who just want to see conflict because they want the drama. And it's like, we don't actually want this.
Yeah, there's a bad cross-section of people. War is exciting and tracking tail numbers is exciting.
Yeah.
And college football season's over. The coaching carousel is mostly done. So
now we're llooking at other radars.
Yeah, now we're trying to figure out what other tail numbers. There's been a lot of this plane left Tehran, and it might have had a prince or something down there. Whatever. I don't know what their hierarchy looks like, but some guy is trying to seek asylum over here, but then his plane disappeared. They turned the transponder off. It's like, is any of that actually happening?
Who knows?
I don't know. I honestly don't care that much until something actually happens.
It does seem like it's an evolving situation. There seem to be at least reports as of now that the protests are kind of over. And that seems to be, at least in the public narrative, what Trump is suggesting is happening and what he is seeing, and that the executions and killings have stopped. So we're standing down for now. And we're seeing some of the movements yesterday in those sectors been reversed out a little bit. So
yeah, it's the whole thing. I was even writing it in Teams yesterday. We were fading some of the defense stocks, fading some of the oil stocks, buying some of the things that were getting smashed, and I think that was the right move. What is interesting is that rates fell yesterday and have stayed down. I think they're still at 413, maybe 414.
We're selling off a little bit. We're back to, wait for it, 416, where we started the day yesterday.
Yep.
So, but it was a little bit. The long end is definitely net lower. 30-year down to 479, 20-year 473. So we've moved down quite a bit on the long end, which is good for the boys. We did ask our YouTube analytics which segments pop. It says that bond convexity technical discussions maybe not so hot, so I'll keep it to that.
Yeah, I think what will be hot is we've got an old corporate feud going on right now, Ben, with Amazon and, if I may quote Tom Brady, Sacks.
Socks.
Socks.
We're gonna pass the ball. And we're gonna sock the quarterback.
Look at this pass.
I think if you think it has anything to do with his teeth, his weird horse teeth.
He's got some teeth, man.
He got some fresh ones, and I don't think he knows how to use them yet.
Carrot hates to see Tom Brady coming.
Yeah.
I'll tell you that. I mean, that thing's just getting shredded. But in 2024, Amazon took minority stake in Saks with a $475 million bid on some private equity, preferred equity, excuse me, not private equity. Helped them fund the acquisition of Neiman Marcus. Part of that was just this essentially royalty deal where, hey, you've got to get Saks on Amazon. It was a all-time, Ben, you're exactly spot on in your notes, a Kevin O'Leary, a Mr. Wonderful from Shark Tank type deal. But they're not meeting their budgets. Saks in trouble. Yeah. Saks getting sacked.
Saks, when they acquired Neiman Marcus,
Say it right.
It was supposed to be this big rejuvenation of the company, and they were
acquisition.
They were really going big on this, and they funded it with private equity money as well as a preferred equity tranche from Amazon. And in exchange, as you mentioned, Amazon got to sell Saks products on its website, and they thought that would be $900 million over 8 years, and Amazon would make its money back. Well, it turns out that Saks is a terrible company.
Yeah, Ben is no fun.
And not only did they not pay $900 million over 8 years, but the preferred equity has basically been wiped out. And not only that, but Saks isn't even paying its own vendors. They have hundreds of millions of dollars that they owe their suppliers for inventory. Usually these are supposed to be paid for on a consignment basis, but they just acquired the inventory and did not pay companies like Chanel.
It's only $135 million due to Chanel,
which is just incredible. I mean, it's an incredibly poorly managed business, and so what they're doing is they're saying, we're not going to survive, so we're going to go Chapter 11 bankruptcy.
Also, I got some questions. A dumb retail question. At what point is Chanel like, if you sell another $10 million worth of purses and don't send me any of that money, we're going to have a problem? I mean, $135 million seems like a lot.
Yes.
I mean, you know how the French are. They'll let you just walk right all over them.
So essentially what Saks is doing is they are saying, we need Chapter 11 bankruptcy protection. We need reorganization. We need to basically walk away from the debts. And Amazon is saying, hey, hold it just a minute. You guys completely screwed up. And now you're essentially saying, because you managed so poorly, in just 1 year, you went from acquiring Neiman Marcus and taking $500 million of our money, not to mention the money that you got from other capital sources. You blew through all of that and then some, and now you're saying, yeah, your equity stake is worthless.
Sorry about it.
And we're just going to go to debtor in possession financing. And so Amazon is pretty irritated with that. The fact of the matter is the money's not there. What Amazon's doing is trying to keep a stake in case the company sells. Because if Saks turned around and sold the business and Amazon's already wiped out, they don't have any equity in the business that gets sold or any of the real estate that gets sold. It's all just owned by the debtors.
And I would think it's an attractive proposition for somebody out there because they're like, hey, we got all these handbags that we never paid for. Do you want to buy them?
It's a bad deal. I mean, it was
the mafia does.
Yeah.
It was a bad deal by Amazon, and what they call it, they didn't have the pivot security. When you're doing these deals, you want to have the pivot security, which means that you have control in the case of something blowing up. Apollo does this exceptionally well. They own the right.
They almost don't
tranche
mind
of
it
debt.
blowing up.
They kind of want to get rid of everyone else, and then you're in control, and then you can dictate the terms of the bankruptcy.
Then you can sell the handbags.
And Amazon doesn't have that, and they're learning that the hard way. I think bankruptcy in the United States is a tremendous feature of our system because it allows people to take risks. I think in this case, I think that Sachs is using it as a get out of jail, not free card, but it's convenient for them. And it's convenient for the creditors who actually will get equity as a result of this.
Not so convenient for Amazon. We've got other company news. Let's jump to some economic data that we've got coming through. The Empire and Philly Fed manufacturing indexes getting an early look at 2026 data, the first read for January. What are we seeing, Ben?
The Philly Fed's kind of all over the place. Current indications are that manufacturing picked up recently. The Empire State Manufacturing Survey, which is the New York survey, was really positive, actually. Stop me if you've heard this before, but new orders accelerating, manufacturing accelerating, and prices down. In fact, one of the subheaders, and it's only a one-page release with 3 subheaders. First subheader is business activity increases. Another subheader is firms expect conditions to improve. And the third subheader is selling price increases slow significantly. In fact, to the lowest level in 2 years.
Subheader. I barely know her.
So
Well played. Very well played.
so the point here is that employment is going up. Employment, we'll talk about it in a little bit, but growth is going up and prices are coming down.
Let's Boston Scientific, man, down about 3%, buying Penumbra for $14.5 billion, 20% premium. Penumbra makes devices that treat vascular and neurovascular conditions like strokes, things like that. Basically a cash and stock deal. I don't hate it.
Yeah, and as a shareholder, you can decide. You decide. Do you want $374 in cash, or do you want an equivalent number of Boston Scientific shares in Boston Scientific shares? Overall, it's going to be about a 75-25 split between cash and stock. So that's how it's all going to shake out. But a $14.5 billion deal on a Wednesday morning is, I mean, these investment bankers are getting paid. Thursday morning. Man,
Wow.
I've been off on my days of the week the entire week.
Man, it is tomorrow day today. Along those lines, Goldman, stock's basically flat, but M&A advisory fees up 41%.
Yeah, unbelievable results from Goldman, and they really paced the field in investment banking this quarter. The problem with investment banking is that it is transactional business, and in a transactional business, the shareholders say, well, it's great you had a good quarter last quarter, but what are you going to do for me this quarter? And so that's why the stock isn't up. Plus, the stock has just run so much. So they did what they had to do. They posted some earnings. They increased book value per share, but shareholders look to what's coming up. And what's coming up is now you have a bigger hurdle for next quarter.
BlackRock, largest asset manager in the world, perhaps a good takeaway on what some of these massively sized companies are doing on the employment side and their focus on margins, which we've alluded to on this call, I mean, for several months. But BlackRock up about 2%. They did see some acceleration in annualized organic fees. They had $700 billion in net flows for the year, but basically half of that came in the fourth quarter alone. Meanwhile, they're tinkering with the margin by streamlining employees, getting some revenue acceleration, and they're saying that they really don't expect headcount changes in 2026.
Yeah, and then most of the inflows came on the retail side and in iShares, and they expect revenue to be up 15%, or Wall Street expects revenue to be up 15% this year with flat employment. So again, GDP growth going up and employment staying steady.
What else are we seeing on the company side, Ben?
I think it would be good. I think we included on the charts a Wells Fargo. This is actually a slide directly from Wells Fargo from yesterday. I thought this was relevant for everyone kind of understanding where we are on jobs and the economy. But if you look at it, loans up 9% on a year-over-year basis, deposits up 4%. That's pretty good growth. But headcount is down, I think I have the number there, 6% or 8%. So what you're seeing is, again, you're seeing GDP growth and headcount reductions. I was talking to someone this morning who works in IT, and he was saying that he's basically spends the entire day like doing his work, and then on the side he'll have Claude running, and he probably spends about half an hour just kind of giving it prompts, and it does a full day's work for him. It's just working constantly on the sideline. So he's basically two people in one doing these jobs. And I think that this is where the agentic AI is really taking off. And again, we can sit here and say, it's still not perfect, and there's some errors. And he was telling me like how he'd say, hey, there's an error with this. Can you fix it? And it'll go ahead and fix it. But this is year one. It's going to 4x this year, at least in terms of its capabilities. So by the end of the year, I think that we really start needing to evaluate a situation where employment is going down, unemployment is rising, and GDP is really good, because we're going to see bigger and bigger gaps between the haves and have-nots, and that does not generally bode well for political peace heading into a midterm election.
Yeah.
This is mildly related, but I was reading an analysis. I've been really digging in on the Fed owing the U.S. money. And there was an argument made in this article I read that the reason Besant and by association Trump really want rates to come down is a number of ways that attack the Fed's balance sheet, which is essentially right now they're paying the banks to hold their reserves. Well, why would a bank loan out money if they can make 4% on it? Because Wells Fargo, notably, even yesterday I had a meeting with a client and she was complaining that Wells Fargo doesn't pay anything on her savings, but she likes to keep cash there. So they're not loaning money out to the extent that they could be, because they've got these reserves at the Fed. The Fed's paying them, whatever the federal funds rate is right now, 3.5%. So they don't need to go give you a car loan and really make any money, because they can just make money by holding those reserves there. So if you start attacking the levels of reserves, you start lowering the interest rates, then you get a double whammy, which is the Fed stops losing money. They are forced to let those reserves go, which the bank can then loan out. And not only that, but the bank is now more incentivized to loan that money because they're not just getting the free money out of the Fed. And so you kind of get a triple whammy, which is banks make more money, more loans go out, increases the velocity of money, and also starts to push the Fed towards reducing the deficit naturally, which is what the balance sheet is supposed to do. And so that might actually be the quiet undertone that Besant is pushing for with the Fed, which is if they cut rates, you're going to get more business activity as a function of how the $7 trillion Federal Reserve balance sheet is operating at the moment. Rather than operating at a loss, let's start generating some business activity as a result.
A lot of business activity happening in chip space as well. Just wanted to touch on that. Taiwan Semiconductor reported earnings overnight. We already knew what the revenue numbers were because they report monthly revenue, but what they did say was that they're going to step on the gas even more in terms of CapEx. They went from $29 billion in CapEx in 2024 to $40 billion last year, and now their guidance is for about $55 billion in CapEx this year. So a lot of the semiconductor companies are just absolutely ripping on this. What's important, too, is that Q1 revenue is expected to accelerate. In fact, the full year revenue is expected to accelerate. We just did 26%, or Taiwan Semi did 26% in Q4. They expect 35 to 40% growth in Q1. And they're doing so at tremendous margins. Now, those margins might dip a little bit as they come out with new products that are at lower and lower, at smaller and smaller and more technically specific. But right now capacity utilization at Taiwan Semi is going up, which means gross margins going up, which means profits are going up a lot, and the stock's up 5%.
We did get initial jobless claims below 200,000 for the first time in 6 weeks.
198.
Just barely under there, which is a little bit interesting. Market Watch immediately jumping on a long-term narrative, saying that layoffs and low unemployment have formed part of the bedrock of the 5-year-old economic expansion.
Well, except for that recession we had.
So if we want to take the most recent data point, one of many, and impute how good the jobs market is, I guess that's how you do it.
There was a really funny tweet I saw yesterday where they were comparing Associated Press headlines around inflation, where it was like 5 years ago.
I saw that.
Yeah, it was like inflation cools from 6.9 to 6.7%, showing a really positive trend on inflation. And then yesterday they were like, inflation at 3.5% on PPI shows strong heat inflation in production.
By the way, on that PPI and the CPI for that matter, everyone's lamenting. Everyone's saying, oh, watch out. The inflation's really coming back because look at this gas, these gas costs, these utility costs. I don't know. Maybe natural gas will go up today because it's cold outside. Who knows? But natural gas spiked in November and came straight back to earth. And by the way, it was down 10% yesterday.
Oops.
So all of those, that big tailwind for inflation to go back up in November is getting erased in December and going to get more erased in January. So I think that's very relevant. We were talking about it yesterday. I mean, Tom, you were just shaking your head like, man, this is crazy. And it's all about those natural gas prices, and all of that has come back.
My question is, Ben, you would know more about the machinations of this than I would. How much of that is going to feed into the core PCE number?
So a lot of people are saying that core PCE, so first of all, core should strip out the energy, but a lot of people are saying that PCE is going to be higher, and we're going to see a wider gap between PCE and CPI, at least in the short term.
Yeah.
But I mean, I think that you're going to see both come down. I think January and into February, people are going to be a little bit surprised that it's not accelerating. Frankly, like what happened in December.
Mm-hmm.
And by the way, on the PPI, we only have November numbers. I think PPI in December is going to be lower than November. And I feel that with a very strong degree of confidence because you look at the comp and you look at all of these things. But the headline is, well, PPI is the highest it's been for a long time. Okay, first of all, it's November data. It's using weird natural gas stuff. It has a weird comp, and that's all going to get reversed.
I mean, a long time is relative. 3 years ago, it was like 9%.
Right.
Yeah.
So I think
not that long ago.
Gun to your head, Ben, is this the last death rattle of inflation before we start really tumbling heading into the summer?
I don't think so. I think that we'll probably see something again in, June or July. But I think we're
hot boy summer when the housing market takes off.
Mm-hmm.
I mean, hot boy summer is going to be fully on with America 250 in the hottest country in the world.
UFC fights.
We do have somewhat tougher comps in March, but I think the trend is the trend, and the trend is down. And you look at the Empire Manufacturing today, and that just supports that.
Inflation getting sacked. All right. We'll wrap it up there. Y'all have a great day. Talk to you tomorrow.